a little chat. Tell us about the day job. Tell us how it's going. What's the investment climate like in 2016 for you?
Exciting. I think it's in a word. I think it's different to what we've seen over the last couple of years. But you ask about day job. I mean, for us, it is all about finding those unusually talented entrepreneurs who are looking to build big businesses. And if you find those individuals, they're the people who are talent magnets for teams to come and join. And clearly in London, we have the most amazing financial services and fintech community. So I think about 20% of our portfolio is either fintech or fintech related.
Right. Does the competition, I mean, obviously you've got a great reputation in fintech. Fintech is increasingly mainstreaming. Do you find now that there's a lot of people seeking to eat your lunch?
We're seeing, we've seen the change in the whole ecosystem. If you think back to the financial crisis, people coming out of university or out of the business schools, they wanted to go and be bankers, they wanted to work in the professions, and that's changed. The attitude of, I want to go and join a high-growth small business is there today, and that's what's made a fundamental difference. That clearly then has meant that more money has been attracted to the field,
right.
Which is a good thing, because in the UK and in Europe generally, we had a paucity of money at the seed, Series A, Series B.
So give us a sense of that money. I mean, there's a lot of businesses in here that would like a bit of it, I'm sure. So what's the scale of opportunity we're talking about?
Well, I think you've seen a change in the seed environment, number of angel investors, whole number of serial entrepreneurs who have come through. But there's been more and more Series A money, so that sort of first institutional money coming to the marketplace. We're starting to see more of the US investors come over and start to back businesses. You've had a business like Deal already on the stage. So that's starting to come, and that's all about how do you scale these businesses to being substantial rather than just starting up.
We were talking backstage about the fact that in the US, if you were having a conversation, or if this was one of your counterparts in the US, is that there might be a bit of talk about the wind out of the sails a little bit in terms of looking at fintech right now. I mean, is that a sort of a fair compare and contrast?
I think you have to consider what's happening in the valley, and you see with regards to valuations and what I would describe as a deflation of the, if you called it a bubble beforehand. Now, you have to be aware of that. I think we have to be cautious if there are European businesses that are going and raising substantial sums from US investors at very high valuations. Right. And at the end of the day, it's substance over form. What are these businesses actually delivering?
Right. And presumably you would make the case for substance, but there is, part of the sort of maturity of the sector is that people like Adair Turner are talking about fintech being the next great financial services risk. I mean, what does that do to the investment climate for you in terms of the way that you look at fintech businesses and value them?
I think we're not only Adair Turner, but I think Fellows was on stage recently talking about if you were going to rush to build a very large loan book, that generally hasn't worked out well for the banks in the past. So a degree. But the
category of fintech investment, what does that do? I mean, when we think about things like power technologies and that sort of thing, I mean, there's a big sort of case being made that some of this is hype. Give us the case for the reality.
Oh, I think the reality is you have a sector that has a whole series of people in the chain, and where you have that sort of inefficiency with everybody taking a piece of the action along that. There's the opportunity that it's ripe for disruption, right. And that's what is exciting.
So for businesses in the room now that might be thinking of sort of collaring you in the coffee break, I mean, what are the sort of things that you look for? What makes a great success story in terms of an investable type of business for you?
Well, one is, I mentioned with regards to, people first, and that really holds true. The next is the manner and the way in which you're going to go out and execute on that business plan. So have you got the right people around you? Have you got the access into that marketplace? And actually, can you be a global business? Now, the great thing about London is we are a global financial centre. And if you don't think, how am I going to make that move then maybe to the States, which will generally be New York, or into Asia, which will generally be initially Singapore.
Right, and presumably also the maturity means you're looking for different types of investments. I mean, the sort of rise of blockchain, or in fact the vote we had right at the beginning in terms of mobile. I mean, where are you hunting out? Where are you finding the businesses that you're finding the ones with sex appeal right now?
Well, I think what's interesting is you described it as blockchain just now. If you had spoken a year ago or 18 months ago, we'd have talked about Bitcoin. It is all about blockchain. That is going to have a major impact. Now, the question is how do you take blockchain to be traceable and accountable as we go forward for mass adoption? Other areas that I would particularly point towards, we've seen a lot of disruption in maybe the lending market with grass crowdfunding, but we haven't seen a huge amount in, say, insurance. So insurance tech, I think, is an area that we are particularly interested in at the moment.
Right. I mean, this is one of the sectors where people really do understand what you mean by the word unicorn, and indeed even a super unicorn, $10 billion valuations. I mean, give us a sense of how prepared you think this marketplace is to actually build those sorts of businesses.
I mean, the financial services market is a huge market, so there is the opportunity to do so. I think what's happened over the last few years is the unicorn terminology has been particularly unhelpful,
right,
actually, and therefore people have...
Why?
Because people want to be seen as a unicorn. And that's a very arbitrary
do people come and pitch to you and say, I'm a unicorn, get me out of here? What do they...
Well, to be fair, as more of an earlier stage investor, no, I think that's generally been pitched to some of those investors who have come in at slightly later stages.
But are they saying we have the potential to be a unicorn? Is that part of what you hear as a pitch?
In terms of you want to see those businesses have the opportunity to be certainly multi-hundred million, if not multi-billion businesses. And that's what's starting to happen in UK and European businesses.
Right. How investor ready do you find businesses that you're meeting in terms of taking on VC?
Again, ranges. I mean, what's interesting is if you get an established team who have done it before, they are particularly investor ready, as opposed to the group that may have been established for a number of years who have scrapped away to get to a certain point, but are resistant to how do I do this quickly? And for us as investors, scaling it quickly matters. So how can we see that happen? If you mentioned Zoopla earlier on, that was investment in January 2009, IPO in 2014.
I couldn't finish without the question that is on everybody's lips. Where did the name Octopus Investments come from?
The name Octopus Investments came from a child's alphabet, and O used to always be octopus.
Oh, yes. Well, there you have it. Nothing to do with fintech, but an interesting anecdote nonetheless. Alex MacPherson, thanks very much indeed. Cheers. Thank you.